You're listening to the South and Sideways podcast on the Urban Sentinel channel. I am your host, the Urban Sentinel. Let's get into it. CBDC, central bank digital currency. What is being said about it may not entirely be the truth of it. I'm going to cover several phases that I believe will occur as our country and other nations move towards a digital cashless society. Now remember, I'm not driving this bus. I don't control where it stops or if it goes off the road into a ditch. I'm just giving you my take on a potential destination. Phase 1, the modern penny pinch. It's a soft launching of a cashless society. Now, many other European nations have already removed their penny a while ago, and they've adjusted, but they also have a different tax setup than we do in the United States. But as of recently, the U.S. Mint has phased out the production of the penny simply because it cost more to make 1 cent than the actual penny is worth. Now, with that, we've run into the situation of what could be considered a rounding tax. Many small businesses, they get their monies directly from a bank that supports them, and those banks often also support larger businesses, especially retail businesses with high levels of cash. So it's very easy for one retail store to go down and buy up literally $10,000 worth of coin and walk out of there and fill all their cash registers up. And then that small business goes down and that individual branch says, oh, we're out of pennies. We have to wait for, an order to come in. In the next year or so, there won't be any more pennies coming from the mint, so it's only going to be what is actually available in circulation. Now, I've seen and experienced some small retail stores actually adjust by doing their own rounding. So basically, if your change was, let's say, your total was $10.93, and you gave the clerk a $10 bill and a $1 bill, it's $11. Now, you should be getting back 7 cents. If they didn't have the pennies, they would just give you the 5 cents and, here's your receipt, there you go. If you're not paying attention, you think, oh, no problem. But then you realize there's 2 cents missing. Now, if you say, I'm missing my 2 cents, they kind of give you that look like, well, not really much I can do about it. I don't have any pennies because their drawer is actually empty of pennies. Some places they will round down if it's 3 cents or lower, or round up if it's 4 cents or higher. So effectively speaking, the United States as a whole, across all the different states, and I'll use Connecticut as an example, we've got a general tax of 6%. There are lower tax percentage rates and higher tax percentage rates for specific types of items, but across the board, you're looking at about 6% tax. So with that being said, they would have to drop that general tax rate to 5%. So you effectively, whatever change there is off of the taxes is going to be effectively divisible by 5. So it's easier to do the 5% than the 6% because that will always require a penny. Now, of course, you say a lot of people pay with card, pay with credit. Absolutely true. And that's one of the reasons why this is going to be a very simple, subtle push. Because what will happen is you may have states look at that and go, initially, we're going to adjust our tax rate. Now, I'm not being cynical, but most states never lower their taxes. If you have 10 things on a tax line that the state takes money out of your paycheck or out of your pocket, over the counter, whatever it is, and they lower the percentage of tax on one of those 10 items, they're always going to increase something else in the other 9. It might be a small incremental amount on 1 or 2 or across the board, but they never arbitrarily lower just to lower and leave it at that. There's always an increase someplace. So they would realistically look to find a way to offset that 6%, either by raising up the 6%, which the only thing they could do is bring it up to 10, which would cause major problems. So if they dropped it down to 5%, they'll of course offset that, raising taxes elsewhere that you won't immediately see because it's not an over-the-counter transaction. But the effective means is to push people, to encourage them to not use cash anymore simply because of the hassle. And you say, well, to one extent, it's a penny here, it's a penny there. Some people, not a problem. Other people, they are literally counting their pennies because they need every single cent that they have. Also, on the other aspect, if you think about it in two ways, You could have a person that is literally collecting bottles and cans just to get by, and they may only have enough to make one hot meal for themselves. Right now it's January, the middle of winter time. That 6% cash, and they don't get their 2 or 3 cents back, that sets them back a little bit. That's something that they can't afford. Also, on the other end of it, it's theft. If, effectively speaking, the retail establishment does not provide you with your change, it might only be a penny or 2 pennies for you. Multiply that by 100, 500, 5,000, 10,000 customers over the course of just 1 week that they're not giving that 1 or 2 cents back. And then that starts to accumulate, that they're effectively ripping off the customers by not providing them with the proper change. So again, it starts to push the retail transactions into that digital area of it's easier to use a card than it is to use cash. Now, again, it's all speculative. There's nothing concrete. No laws have been officially made, but this is something that you can immediately see the effects of. Now, we look at the next phase, phase 2, what we're being told on the official narrative of going cashless is that it benefits the state and the non-governmental organizations. It encourages faster cross-border settlements, international trade. It reduces the aspect or the potential aspect of money laundering. And it also benefits the people with a direct stimulus injection. No more waiting for the check to arrive and then waiting for that check to clear and then getting the money into your bank account. You don't have to go through all those hoops and hurdles. The government would be effectively able to airdrop you money. They'd be able to insta-Zelle you money, however it may work out, directly into your digital wallets and into those bank accounts. Now, that, of course, too, then encourages people to get a specific, whether it's a government funded or government approved program that controls all of that, a third-party app that you download. It'll also benefit the government in that aspect, that it's easier for them to regulate and to monitor the transactions to ensure the sanctity of the financial transactions. Now, the argument being is that not everyone is online or online all the time or has certain things in the digital format. So marketing the CBDCs is a way to bring in that percentage into the financial system, because it's not just the individual. You can have a person say, I'm not going to do it, I'm not going to bother with it. But then if they're conducting any type of business with banks, with other businesses, with other companies, other individuals, and it involves financial payments of some sort, they're going to be stuck, because if they're paying on a car, doesn't matter who the original loan came from, they're used to going down to that office, dropping off an envelope with a check or with cash in it, and having that credited to their account. Now those businesses will say, oh, we can't take this cash or we can't take this check. It has to be in this specific digital format or come through this app, which means that you would have to put that money back into a bank account and then transfer it into the app. It may seem like a long way around the park, but it's designed specifically to put up more hoops and hurdles for you to jump through, instead of just taking the easy slide down to the bottom of the playground that they want you to take by simply coming on board 100% with the digital currency. Some of the other benefits they'll tout is the automatic, again, settlements of it. No more waiting for things to clear. Especially it's frustrating if you received a check from a financial institution that is also the same bank that you use and you deposit it, that bank still makes you wait for them to verify the funds. But yet it might have been a certified check that was drawn from that very same institution. They want to make sure it clears. When you get a refund check from the federal government, they want to make sure that clears. And so there's always some type of delay, but yet going the other way, as soon as you write a check for something and put it in your bank, boom, that money's gone. As soon as they get it, it's gone. No waiting whatsoever. So with the digital currency market set up, it'll automatically verify the funds are there, transfer it, and then automatically complete the transaction, which then that sort of, it secures transactions to the extent that it's reliable and you don't have to worry about it. But it also then does cause some problems if you're not paying attention. It's one of those situations where you can't simply write the check out and say, don't cash this till Tuesday. And then the other person understands, all right, no problem. You got to wait for your paycheck to clear. Now it's a case of, if you don't have your paycheck in and you go and try to do a transaction, it's being monitored. It will automatically stop it, knowing that there aren't going to be enough funds because it's tracking the digital debits and credits through your account system. Now, with that being said, that puts it into the central authority that will be in charge of this. They effectively can expire, pause, adjust, or delay your funds, your transactions, how they choose based upon either a predetermined pattern. They basically look at all your transactions and all your dates and see what the pattern is. Basically, the algorithm will get an assessment of your shopping, spending, and your debt and determine exactly, whether you like it or not, where you should be spending your money and when that money should be going out. It may even reach to a point where an app could arrange or rearrange your payment plans. It may see that you've got a loan payment for school, you've got a mortgage, you've got a car note, you've got 3 or 4 credit cards, and you've got all these different pay dates going on. It may determine based upon the amount that you owe in each one, and then the length of the payment that you have for the terms of the loan. It may switch around to optimize your payment plan. So you're still working, money's still coming out, but now it's coming out in different amounts at different points in time. There may be a way where with the digital currency linked into your systems that your interest rates get automatically adjusted, even if that's not the type of contract that you had for that loan. It may adjust it and slide that scale left and right, up and down. So this way it may take out less one week or one pay cycle, but at a higher interest rate, and then drop the interest rate down significantly lower, but take out a larger amount in the next cycle, depending upon what other payments are up. It would almost be as if it's trying to auto adjust all the money that you owe versus the money that you bring in to maximize what it can do to get that money, because it's going to control all of your funds, but it's also going to control the funds that are going in making the withdrawals, because it'll also know that lending agency, how much money they're taking in, and it's going to be monitoring them. So it's not just simply something that's going to come down on the back and be the burden on the people. It's going to affect businesses large and small across the board. But with that being said, it does sort of end that anonymity that cash has, where sometimes you just pay with cash and you're on your way and you don't need to have a discussion about it. Once more organizations move to full digital transactions, especially when those digital transactions become tracked and locked in and serialized, it's going to be a lot harder just to do cash. And it's going to be a case where you're not going to have that privacy that you had before. Even if something is effectively, nothing suspicious. You just want to buy a gift for your spouse, but you have a shared account and they look and check the balances and do the books every week. So you don't want that transaction showing up on the bank statement, but somebody had helped you out before, or you had helped someone out before rather, and they paid you a couple bucks in cash, whether it was, you helped to move or you sold some stuff on eBay, and you use that cash to go and buy the gift, whatever it is, that stays off the books. So you're able to make that purchase and surprise them with the gift, and nothing is actually shown up on your personal account that they would notice. But with the CBDC, if more businesses and people aren't doing that, everything is going to be logged, everything is going to be cataloged, and you reach that point where the personal autonomy that you had starts to disappear, because it becomes more and more difficult just to simply keep things to yourself. Now, within phase 3, that programming, that entire setup would be designed for that purpose, to basically put everything up, visibly speaking, as it were, for the digital monitoring system to track, record, catalog, and connect all those different pathways where the money goes. Phase 4 is similar to the Chinese model with their use of their electronic Chinese yuan. I think it's the ECNY. It's integrated into their currency system. It's their digital yuan. It's linked into their social credit system, which some of you may know about. It is basically, for lack of a better word, a behavioral corrective scenario. In their social credit system, it starts with 3 primary areas, and they overlap. 1, visual surveillance, security cameras across entire regions, similar to what we have here, but they're linked into a database network. Those cameras are optimized for biometric scans, so they can spot your face. They can identify your walk, your pattern, your gait. They also can identify and read plates, so they can read vehicle plates, maintain descriptions of vehicles linked into motor vehicle registration. Then they also have the, the digital transactions that occur at the ATMs when you're purchasing at the point of sales through all those different areas, as well as the digital footprints left with anything from booking a hotel, reserving a table at a restaurant. All those things become interconnected. So effectively, whatever you do out in public is going to be tracked electronically. It's going to be tracked digitally behind the scenes and also out in front. They also have the aspect that is very similar to the way Germany was during the rise of the Third Reich, where you have people in your neighborhood that basically rat you out. You put the wrong type of waste disposal material in your garbage and your neighbor happens to notice it, they can just simply give a little tip to a hotline and then deep, you've got 2 credit points pulled off of your record. You jaywalk or you just make it across the street as the light is changing from walk to don't walk, but you're still technically in the street. A camera catches you. They consider that jaywalking. You were going against the light. Another 3 points. You lose points in the social credit system, similar to points on a driver's license, except for instead of simply having your license suspended, now suddenly you can't take mass transit. Perhaps there are tolls in certain areas. Now your car isn't allowed to go through. And if you do go through, you're going to be fined and your car could be impounded. You could simply not be allowed to make certain purchases at certain retail locations. You might not be able to leave the country. And there are cases, and you can find this information out in searching in Google and YouTube. There are people that are now homeless because their accounts were frozen after so many small violations, incremental violations that built up, that they no longer had access to their accounts. They couldn't pay their rent. They got evicted. They couldn't go anyplace. And in many of these cases, the companies that they work for, the companies weigh a scale, plain and simple. Piss off the government or piss off an employee. The companies choose to piss off an employee. So in many cases, some employees get terminated because it also goes against that company's effectively credit system by having an employed no good bum in their company brings their status level down. So they don't want to have that sort of taint inside their structure and their infrastructure. So it's easier for them to simply fire you. And of course, they have different type of worker labor laws and things like that. Here in the United States, it's very difficult to do that. But again, if the United States government is putting the pressure overtly or covertly on a business to get rid of an employee, and that business knows that, if the government wants to scorch them, they can scorch them. At the minimum, tie them up in IRS audits. Suddenly they're getting their entire financial history ripped apart. They're going to find a way to let you go, and they'll have to deal with that in court when you bring a lawsuit up later. And all that sort of builds up. And again, it's obstacles and hoops and hurdles that people have to jump through to kind of get to that next level. Now, for the U.S., as far as actual social credit systems, we're not there yet in a unified, cohesive form, but we have all of the bits and pieces. We've got all the little blocks. We already have the security cameras with the biometric scanners and the automatic license plate readers. Anytime you use a credit card or a bank card with a chip in it, not just simply at the point of sale, whether it's at the cash register, at the gas station, wherever it is, but there are readers that will be able to pick that up, that actual signal the RFID chip sends out, and they can be in any location. So you can be physically tracked within a building, within an area that these sensors are there. And many times those sensors are just for certain transactions, but they are able to pick up the devices nearby. It's only the close contact ones that it registers based upon the time that it takes that signal to go out and back. So we're talking milliseconds for it to be in contact with something close to the device versus it's picking up an ambient signal several feet away. But again, this is levels of technology that in some cases the hardware is good. It's just the software that needs to be upgraded. Other cases, it gets an evolution. It starts off at one level and then gets changed and brought up to the next level. Now, the fifth phase, through the global trends that are going on, and you're looking at these points, flat tax is something that is big in a lot of countries except for the US and a few others. But the cost, the tax, and the item are integrated together. So the price is actually the price. period. It's not the price under these conditions or those conditions. The price is the price. That would be the next thing that would move in the United States, is across the nation, you would have a flat tax setup where an individual state may still charge differently for the same item from one state to the next, but it'll be at a flat, easy, basically counting fingers and toes tax rate set up. And then the federal government would have established a new tax system that would also incorporate that, and everything is going to be connected into it. They're going to push for a digital world, nation by nation, and then start to link those individual nations together. Now, on a side note, within that, as an example, in Central and Northern Europe, in like Sweden and Norway, they've been cashless for several years. They started off and they hopped on that train pretty quick. And it's estimated that they're almost at 98% cashless society. But funny enough, when Russia invaded Ukraine, many of the government leaders wanted to remind the citizens to keep some cash on hand, just in case there is a supply chain interruption, the internet goes down in their area, things of that sort, where if there's an electronic disturbance and nothing on the computers is working or the transactions aren't going through, you have cash in hand that you can then still buy some milk, buy some food, pay for your gas at the gas pump if the pumps are operational. So that was kind of a what they call that, a little sour point there, because most of the citizens had gotten on board with the have no need for cash, just tap your card, scan your phone, whatever you need to do. So the other aspect that you can look at is there will be a way to make instant, almost like ration cards. So it would be something similar to the bank cards and the credit cards, but it would keep an instantaneous physical count effectively embedded in the chip. So even if the system goes down, it's almost like a blockchain. It locks in your specific identified, account number, and it locks in the transaction number, and it'll be like a digital series of codes that will be able to be read. Now you say, well, who's going to be able to read them if it's some type of grid down scenario? The government by itself doesn't automatically lose power when things go bad, and it wouldn't be beyond a stretch at all to have a third-party group that has their own dedicated satellites for communication, has their own dedicated and isolated servers for electronic transactions and communications. And those servers, they could be in a large data center, which there are hundreds of those around the country that are protected, and they keep all these transactions in that blockchain format. And then, of course, if they're working with some type of brick and mortar physical location, it might be a kiosk station, it could be a truck with a satellite dish on it, you'd go to that location and you'd be able to bring your digital card and then to get money out. Of course, the government is going to work with rationing out all those things. So if it's a situation where you're showing up to get food, water, medicine, you'd be able to use your card. They'd allot you that certain amount off of your ration allotment, and you'd be able to get those goods or receive those medical services and then move on your way. Now, anyone that doesn't have it, of course, they're going to have to stand in line someplace else. Maybe, Red Cross will help them out and that sort of thing. But for the people that are effectively riding that digital currency train, that would be the backup. And then once the system comes up and running, all those transactions are still recorded. They're still logged. It would be simply transferred over to the main system, booted back up, and you keep on going. Another advantage or disadvantage, as it is with central bank, is when you start watching the stock market, you start looking at business transactions going on. There are a lot of cases where they know something is going to happen. And for people that are financial investors and people that have experience in that sort of thing, they kind of get an idea of where the market's going to go and how that's going to affect. And that's sort of where phase 6 comes in. With that being done, bank runs won't be the same as they were, in the early days, starting from, let's say, the Great Depression and even coming up. You get that inkling that something's going to go bad in the market. Yeah, you can take your money out of the stock market, sell a bunch of shares and then put it into your bank account, but you still got to get that money out of your bank account. In some cases, if it's 2 o'clock in the morning that you hear something's going down, your bank's not open. So even if you try to do a transactional withdrawal, the bank isn't going to have that money set up for you the second those doors open up. It also then slows down that process because it's digitally controlled. The government would be able to simply freeze. There wouldn't be a bank run because the banks wouldn't be able to access any of the funds. They'd have a note on the door saying, due to the ongoing crisis, the United States Treasury Department has halted all transactions per, Section 31C, whatever the number is going to be, that says, sorry, we're not responsible. Whatever cash we have in the vault has to stay in our vault until we've been told otherwise, and you won't be able to do any transactions, or you'll be limited to digital transactions only. Nothing is going to work at an ATM. And with the situations that do occur, in some cases they occur quickly, that's one of the first things people tend to do. Even when it's something innocuous like big hurricanes coming. A lot of times people will go for a hurricane or a blizzard and they'll pull out a whole bunch of extra cash because this way they know they have cash in hand in case the power goes down or in case they get someplace where, the person's like, yeah, the credit card machine's not working because the phone line got knocked down, it's cash only type of thing. That would restrict even doing something like that because that would ensure that you only get to use the digital currency that is controlled in that fashion by the government and the way that they'll have it set up. So there will be a higher level of security, not just simply to prevent theft and money laundering and things like that, but simply to regulate and control and monitor what you as the individual person does with your own money and how that will then be controlled and vectored throughout the rest of the financial system. Now, that then moves us into a sort of two-tiered system, which, of course, as we all know, there's going to be one group, one tier that it works out well for, and then the other tier that it's really not doing the best that it can. And the retail demonetization, that's where it's going to start on the public end. It's going to become something where large physical cash transactions over $3,000 no longer are going to be simply, oh, we have to report what this money is being used for. They'll pass some type of law or legislation that will automatically flag or ban that transaction. It won't allow the bank to do that transaction without prior authorization to the transaction. So that way the transaction that hasn't occurred yet can be verified. And then those laws could also end up being amended to restrict private businesses or allow it to be worded where a private business no longer has to accept cash as a legal form of tender in business. So it no longer would matter about the actual bill, the Federal Reserve note saying good for all, transactions in tender. They'll just simply say, hey, we don't have to take it anymore. So, those videos where you see people coming in to pay their bills and they put down a bag worth of pennies and there's, 10,000 pennies in there. None of that. They don't have to take it anymore. They don't have to take any cash anymore. That would be on the basis of either the dollar amount is over the limit or just as cash only. Then if you're vetted, you've gone through the process, sort of like getting that gold star on your driver's license for the real ID. If you have something along those lines, you're on one list that will allow you either X number of transactions over a certain amount or allow you to do instant transactions with other vetted and verified entities, whether they're a corporation, a government, or an individual. You basically get the VIP tier 1 level, and anything you do pretty much goes through without any hassle, which of course then that encourages other people to go, well, I want to be able to do transactions without a hassle, and they move to hop in line and get in line for that. If you're in the other tier, I would look at it this way, and again, this is all speculation, but I would say the second tier isn't quite the antithesis of that, but it's not the top notch. You're limited either in the number of transactions you can do, the type of transactions you can do, buying, selling, whatever it is, or who you can do them with. Because again, it would be very easy. There was already, speaking on just one side aspect, there was already individual credit card companies that would deny transactions of people using their credit card at gun stores or places that sold ammunition and sold firearms. This was after, I forget, one of the mass shootings, but they didn't want to be associated with having effectively funded the next mass shooter. So transactions would get denied. So now in this case, it's not even the individual credit card company. It could just simply be your individual CBDC account gets tagged to deny you purchases or transactions at whatever the business is, or the business itself gets blacklisted and they can't do any transactions digitally and they can only do transactions in cash, which a large number of their customers aren't going to have that much cash available because everything would still have to be effectively accounted someplace. Now, sure, if you happen to have a few $100s in cash before something like that happened and you went down to your favorite gun store and they said, look, we've been blocked out, we can't do any electronic transactions. Like, well, I got cash, I want this, I'm buying this and I'm buying that. Good to go. Now, if they don't require paperwork on their end for whatever it is, then there's no problem. But if they still have to fill out paperwork and submit that to the state and to the federal government, that's the first step in the paper trail, because now they're going to look at that. It's going to be submitted and they're going to say, okay, well, where did this transaction occur? Because we don't see anything in the digital ledger that shows this amount on this date at this time. And then that's going to bring into the next process of, oh, we're going to do an audit, and then that business gets shut down. And if they have a choice between losing their license and facing some type of felony charges versus ratting you out, saying, well, look, the guy came in with cash and he paid for it, so, here's a copy of the receipt, they're going to be throwing you under the bus real quick because that's their livelihood. And again, balancing that scale between you getting your neck chopped off or someone else getting their neck chopped off, that's usually the way it goes. Now, looking at the surveillance aspect of it, because that's the way I feel this really is. It is a sort of soft surveillance. It doesn't have to actively do anything. The information comes into it, passes through it, wafts over it, and it circles all around it. It creates that parallel economy, similar to what I just mentioned about the cash transactions. You're going to have people that are going to have no problems with it. You're also going to have people that do have a problem with it, but they have no way to adjust their life and the things that they're doing around it. Sometimes you simply can't get out of the system and still continue on with your life the way it is, and you may need to stay within it, and that's something that they have to work on and adjust on their own. Now, if you think about black markets, that would be one, but then you also have to have some level of cohesion within that black market, because you don't want to pay, effectively speaking, through the nose for some items that that you can suck it up, get into the digital wallet, and then just go buy it off the shelf at the store without any problems. So then there becomes that balance. What do you need that you effectively are willing to pay more for versus going along, standing in line, and getting, what you need to get through the digital wallet system? And with that being the key issue, saving up and storing up things like you hear talk about, storing up precious metals, gold and silver, which, yes, gold and silver definitely hold a high value. Gold, I honestly, I don't know where it's at now, but I believe it is definitely over or close to 15 to 1800. I may be completely off on that. I don't check the gold prices because, the gold that I've got probably isn't worth much more than, $200-300 at the most. And same thing with silver. I've got a couple of silver coins, but I know I'm not going to walk down to a bank and, pa-ting, flip it onto the counter and expect them to hand me out a couple thousand in cash. That's not going to be the case. But there's a point where even though the gold and the silver as a precious metal hold a high value, it's going to be harder to obtain that value outside of that digital arena. That's where you're going to get the most for it. If you're trying to sell it off, pawn it off, it's going to have to be almost in an even exchange with someone who has tangible items. And if you know for a fact that, let's say gold was running at $2,500 an ounce, and you had 2 1-ounce gold coins that your grandfather gave you back, when, he was alive 30 years ago, and you've got to pay off some bills and you've got to get a few other things, and you go to trade that in at a pawn shop, one, they're not going to give you full face market value because they still got to make a buck. So you're going to be getting less right off the top. And then number two, even if they did take them in and then they were to give you cash, you still have to figure a way to translate that cash into a direct acquisition of those items. And again, that means the business or the person you're buying from has to be willing to deal it directly in cash. And it becomes a logistics thing. It becomes to that certain point where it's almost more difficult to find a way to work around the system than it is to be in the system. And it may sound like I'm almost contradicting myself in the direction of this, but I'm trying to play the whole field of view out, because too many times you get too focused on, well, I'm just not going to do this and I'm going to avoid that altogether. And you're not looking down the road to see what else you're connected to. And then also to keep it balanced on the other end, there are people like, well, it's no big deal. I'm just going to go along with the flow and there won't be any problems. And then those other problems start popping up. So I'm trying to give a wide enough field of view to see across the entire area so you have an idea of what's coming up. Now, with companies like Visa, MasterCard, Discover, American Express, they are the current middlemen between you and the banking system and the financial network. They provide a service. They effectively guarantee that when you put your American Express card down, that retail establishment knows that they're going to get paid for it. They don't have to worry. They don't have to question anything. They know that they will get paid from American Express, and American Express knows that they'll get paid from you. But if you go to a digital wallet, a direct controlled government financial system, you really don't need the credit card companies, because that CBDC card, that account that you have, becomes that. And it's going to be a certain point where either the credit card companies have to adapt to make themselves useful to the federal government to let them continue doing their business, or they're going to have to figure a way to integrate themselves into the retail market. Because if you're a small business owner and you're paying the fees to credit card companies to have, them on there and accept their card at your point of sale, if you're looking at a digital wallet that the, U.S. Treasury Reserve controls, and you know that all those transactions, when someone puts their card up to tap it or swipe it, or they wave their phone across it, that they have that money in their digital wallet, you don't need the credit card company. You have no use for them whatsoever. The credit card companies are for transactions where you don't have the money at that point of sale at that time. You may get your next paycheck and be able to pay it off right then and there, but at that point in time, using that credit card, you don't have the money. If a digital wallet becomes a national thing, then when people come up and they put their card up there, they put their wallet up, they run that chip that's in the palm of the hand over it, it'll go through because they have the money for that. And then that business owner, that retail establishment, they don't have to be concerned about it. So why would they want to pay a credit card company fees, whether it's monthly, yearly, whatever it is, to do a transaction that they effectively now can do on their own? So the credit card companies, however they're going to do it, they'll have to figure a way to pivot and switch to a way to stay, viable, even if that may be something where they make the sensors and the scanners that read the cards, that read the chips, or they establish the programming protocols that the government would use in the CBD system for these transactions. Or simply put, there may be a certain time where we no longer see Amex, we no longer see MasterCard, Visa, or Discover. They just become things that, you tell your grandkids about. Well, back in my day, we used to carry these cards and they were run by these companies that made billions of dollars. All that will be gone because they won't have a need for them. Because effectively speaking, the transactions will be direct. It will literally come down to the digital form of currency. Either you have the right change in your pocket and you can buy it, or you don't. End of discussion. That's all that there's going to be to it. But then that ensures businesses that you'll be able to pay them and they'll get their money right then and there. They won't have to wait for a hold. There won't be some type of lien fee. There won't be anything else. It'll be one wallet, boom, right into the next wallet. Then that also affects the way certain things are, where you look at payday loans as an example. A lot of people will use payday loans, get advances on their paycheck. Those companies make money. They make money through high percentage rates. They've got a good scheme going. But if your business is moved into the CBDC digital wallet, and even though you're getting a direct deposit, it's no longer simply they send the money electronically into your bank the way it is. Now it's a direct wallet, digital wallet transfer. Those payday loans won't be the same, because now if you needed money right away, you'd be able to effectively apply for a pay advancement, and it would go through that same electronic system. And the algorithm would make that determination based upon the hours that you've worked, your current rate of pay, the amount of money that you owe through other debts and loans, and it'll determine how much of an advance you get and for what. You basically would have to tell the system, I need money to buy this for my daughter, her birthday coming up. The computer system, the algorithm will look at it and make that determination and then give you whatever the amount is, or it may digitally work out a payment system where you get the amount that you're requesting, and then that gets pulled from your paycheck as it goes along, instead of one lump sum, it might be, again, a small amount at a higher return rate, or it may be the same amount going over several months through the next quarter until it's paid off, depending upon what it is. But that will allow you to effectively, again, that's another industry that gets cut out. Now, when you think about things like PayPal, Venmo, Cash App, those act almost like secondary ledgers or shadow ledgers, because you link them to some type of an account where then the money gets pulled out from there. It acts as the buffer between you and the other transaction point. But once again, with the CBDCs, that will remove that aspect of it, because effectively the digital wallet app would become the new Cash App, would become the new Venmo, the new PayPal, and it would orchestrate and handle all that, because it needs to be able to monitor all those transactions that are going on through all the different areas in the digital world. So the government would be able to regulate either those businesses, the credit card companies, the third-party loan companies, the Cash App, PayPal companies, be able to regulate them, put them onto effectively a single one-to-one system within it. So this way, they, to one extent, would probably lose money or not make the same money, because now they have to have the exact amount of funds set up to handle the exact amount of transactions. And then that digital banking system would be able to monitor that. So their margin for profit decreases substantially to the absolute bare minimum. Realistically, it would reduce it to the bare minimum based upon almost staffing, because everything that they have behind the scenes that we don't see is being seen by the government to say, look, you only actually have 10 people running this entire operation through the servers, the IT network, and the actual, 2 customer service people that check the emails when certain complaints come in. Otherwise, this is how much that you use per transaction. So their fees and everything else that they would normally be able to pull off from a business or a retailer, those disappear as well. Because once again, if you're doing a direct transaction with the digital wallet that way, you don't need that third-party middleman anymore. The only way they're going to stay around is if they provide something unique enough to the government that is seen as a benefit to the government. Doesn't have to be a benefit to you, but a benefit to the government, making it easier for the government to operate the digital system. Now, all this, again, it's just theoretical. I haven't gone out and delved deep into the financial network and combed through pages and pages of information to pull all this stuff out. I'm not going to be able to present to you hard case examples of Central Europe and Asia where all these things have their pluses and their minuses. I'm pulling the information out the same way that you can, looking at the articles, reading them, watching the stories, and then seeing the patterns and putting certain pieces together. Now, it's not to say that everything is going to be an A through Z exact step process. There are always going to be changes. There are improvements and there are things that, cause setbacks. But it comes down to it, you're not going to be able to use the CBD system without being monitored. So getting around that is almost to the extent, as I've been trying to say before, you almost have to step out of it and be completely out of it, unless you find that middleman, that smoky market, not quite a black market. It falls into the area where it feels like it should be to almost, yes, it is illegal. It's that very, very fine line. And with that, what you'd be looking at is something that goes back to the commodities, the tangibles. So you think about, one, there are common materials. Again, you talk about the silver and the gold, that has a limited function in certain environments. But you talk about tangible goods when it comes to food, medicine, but more importantly, skills and services, because those are the things that are much harder to track. So, start with the basics. The perfect example, plumbers, electricians, carpenters, mechanics, nurses, paramedics, doctors, they all have physical, tangible skills that can still be utilized without any digital monitoring whatsoever. So now it comes down to working out some type of trade system with those people directly. You might know someone that works in an auto parts store and your vehicle needs repair, but the auto parts store just got on board with their new bank and they're totally digitally wired. They can't take cash and everything is tracked and monitored. So that mechanic may not be able to have you bring your vehicle in and do the work on it that you need done, but there's no stopping that mechanic from telling you, well, these are the tools that you need. This is what you need to get done. If you have these things, I might be able to swing by. And then they swing by, you give them whatever it is that they're looking for in trade. They perform the work for you. It's off the books. It's off the record. The job still gets done. And then they still get something out of it. You get something out of it. And that's how the transactions would be done. It would be a case of doctors making house calls, not because they're taking it back to, the early 1900s where they used to come around door to door to all their patients, but because your aunt works for that doctor and they know that, okay, you're in a situation where you're not going to be able to afford through your health insurance the things that are going on. They may come by, give your child an exam, give the recommended, medical advice that they can give because they're still a doctor. But then at that point, it's on you then to figure out how you're going to get the pharmaceuticals needed or how you're going to get whatever the therapy treatment is needed. But you get the exam, you get whatever it is off the books. And yeah, there's a whole lot of stuff where you can say, well, why can't you just go and just do things the right way? You can, but then also too, you're looking at it from the perspective of this is a system that is designed to monitor and maintain control of a population. And once it gets to that point, everything that you do, whether it seems harmless or not, whether it's something that is routine, whether it's something that might be a one-off, is all put into a system. You're not going to be aware of what that new social credit system might do. There might be a case of if your kid is sick often and you're going to the doctors and they're getting checked out, oh, it was a cold this time, oh, it was a sprained ankle this time, it was something else, that social credit system may start to say, well, I don't know, this one kid seems to be getting in a lot of illnesses and injuries. Maybe there's something going on in the home. Now suddenly you're getting flagged for possible parental child abuse or some other type of allegations going on. You won't know about it until one day you go into school and you can't get into the school because it's not letting you in. School, people say, hey, we got a notification, we can't have you inside the building. Child Services is here, they're doing an investigation. The police will contact you. And that's the last thing that you know. You can say these are far-fetched things, but they're not that far down the road. They're at arm's length because it does not take much more than a few strokes on a keyboard to completely change up someone's entire background, their entire profile from what it actually is to what it appears to be. And with that, you end up in those cases where that's exactly what can happen in a fully digital controlled world. It won't just be about finances and what you pay for. It'll be about everything that you're able to do or not do and what the algorithm appears based upon the percentage, because it's going to go through that mathematical computation of saying, well, based upon all this prior data from decades past, this is a pattern that has shown up in 86% of these type of cases. And of those 86%, 60% of those end up in this situation. Of those 60%, 20% isolated look just like this. So this must be what it is to the best reasoning. It will take situations like that, whether it be with healthcare, whether it be with employment, whether it be with where you live, any type of crime, anything else like that, and all link it together based upon the percentage. And in that social credit world, that's where the problem is when you're a vetted tier 1 individual, you either get less scrutiny or almost to the other extent, you're looked at so deeply beforehand to get to that tier 1 that the percentage rate automatically goes down because, well, you're tier 1, boom, 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 boom. It's a lower percentage chance that that's where the problem is. But if you're in the other tier, the lower tier plan, that percentage is at wherever that computer system says it's at, or it might be even higher. It's to the extent where you as the individual, you have to not only play the game, but you have to play the game so well that you impress the algorithm into bumping you into that top tier level, because it's still going to be a small group of people in that top tier level, small number of businesses in that top tier level. If you're a top corporation, XO, you're going to be up there. And people that are in your company would actually probably be up there because they work for your company. But just like I mentioned with the Chinese social credit system, if someone in the company gets a questionable mark or they hit that certain number of points where they're almost going to be annexed, that business has a choice. Keep them on as a black mark or get rid of them. Boom, boom. They're going to get rid of you because they want to be able to keep their tier status. So it's incumbent upon them to make sure that all their employees follow that certain company line. They follow that certain performative process that everyone goes through to make sure that no one brings the company down. And if you're in the second tier, it is more individualistic because you're placed in, your actions become your actions, but it also leaves you open to accusations from other people. You know, the whispers behind your back, that notation, that silent phone call that goes through on the digital hotline, suddenly someone who just doesn't like you or doesn't like what you're doing, boom, they get tagged. Now, can that turn around and bite them in the butt? It's possible it could. That if it's found that they're just simply tagging people and making complaints without any verification just to do that, they very well easily could end up in the place that they're trying to put other people. So again, that whole balance comes down to it. But if there's nothing definitive in place, then you're going to have people behave the way that they behave. Now with that, I would say one of the things you can look at on the outside of the circle is establishing a circle of, trusted people. 8 to 12 people in different areas as best you can. It's hard to hand pick, but if you could have effectively people you can trust with a handshake that cover those areas, that you're in, plumbing, that are in medical, that are in, construction work, that are even in banking, in real estate, things like that, that either have inside knowledge, inside skills, or at least can point you in the right direction for getting certain things done, that can become an advantage, because within that smoky gray market, you can have a small group that you can then work with each other and support each other in different ways to keep each other going and helping out where you can. Sometimes it literally is just physically helping out. Other times it's, I know a person, I'll contact them and then I'll get the information from them and tell you, or I'll get get it set up where you can meet that person and then you can discuss it with them in private, type of thing. And you'd still have to build up and establish your barter base. You're still going to get your over-the-counter meds. You're still going to pick up, all your extra cans of food and, water and tools and things like that. The things that are immediately tangible, but you also want to be able to have some long-term stuff. Just picking up books, used books. Not every single book has to be a technical book. It doesn't have to be a how-to book, but it's better to have tangible information that has been printed, put down on paper, versus relying on the internet, for the primary reason that it's easy that you could look up an article right now, read it, and then come back a week later and that article is changed. Not by a lot, but by a little bit. You won't know it. It won't blatantly appear to be different unless you've screen saved that on a separate file, but it'll be changed. That's what happens with digital information. You can remove and edit stuff, and some people won't know that it's been done because it's the first time they've come across it. So they can read it, they can look at it, and they go, okay, I see what it's saying. This is what it told me. Versus someone who read it 2 months earlier, a year earlier, goes, no, that's not the same article that I read because it said this, this, and this. Digital information, a lot of times the information that's out there, you want to learn how to fix something, repair something, or how something works, you can find it. And then it disappears and it's gone. Similar to the way Netflix works, where they'll have a series of movies. You'll have all the Mission Impossible movies on Netflix, but then you'll see that Mission Impossible 4 is leaving soon, and Mission Impossible 5 is leaving soon. But 1, 2, and 3, and then 6, and whatever this last one is, are all up there. It doesn't make any sense, but certain things get pulled. And so now if you've got a series of information that come in different segments, and they pull one segment, now you're missing that information. Now it doesn't matter that you have the one after that. You need that key point to continue the entire series. Whether that be in something critical with, construction, whether that be something to do with, relocating and the geographics of an area, doesn't matter. Even if it's something simply to look at political histories or governmental processes and things within the government and how they work, if you're missing part of the information, it's going to be harder to verify, because anyone else that goes to check after you, they're going to see that same missing information. They're not going to know for sure. But if you have books, if you got concrete things, it's something that you can use as a base to refer back to. Now, with the whole broad spectrum of our society, especially when it comes to monitoring, electronic, tracking and everything else like that, no one can be invisible. No one can be invisible. It's almost impossible. Not completely, but almost impossible. So the best or the closest thing you can do is just become background noise. If you're going to be in the system because you've got a job, you've got bills to pay, you want to keep a roof over your head and keep food in your kid's stomach, and getting the digital wallet, whether it's an app that you install on your phone and your devices, whatever it is, fine. Isolate it. You have one phone or one tablet or one laptop, whatever it is, that handles that transaction. So your official on the books job, that goes in there. When you're paying your taxes to the government, that goes in there. Only your necessary things go in that. Get yourself one of those CVS pharmacy burner phones for like 20, 30 bucks that you use the reusable charge card on it. One of those, that would be for when you need to do other transactions or make other communications. You want to isolate your upfront, on the board level identity with your shadow identity, the one that doesn't trust the government, the one that if they shut the system down, you can still make calls, connections, and do some transactions without them knowing that, one, it's you, or at least not being able to take from your bank account because it won't be connected to your primary bank account. You'd have to, figure a way to get one of those reusable gift cards or something where you can effectively put cash down on it, pay for the card, refill its balance, and keep it going. Even if it's a case of you get a Walmart card and you're able to use that Walmart card at Walmart specifically for buying things that you need, the card itself would become anonymous. It's just the Walmart card and it's got the balance that it has on it, versus when you use your own credit card, that indicates and tags it to you specifically. In fact, even if you go into self-checkout, if you use the card, it'll thank you by your name based upon your card for, shopping at Walmart. It identifies you, and it adds to the fact that you have the cameras that are watching both at the register and all around. All that ties into the system. Now, that doesn't mean that if you've got this anonymous card that you put on a ski mask and you walk hunched over with a limp and pretend to be Quasimodo to disguise yourself. It just means that if you're using it anonymously, they can't pull it directly from your other account because effectively you are one person, but those are two separate digital formats that are going on. So it's really, in this case, one hand and the other hand are not connected. So you're doing these other transactions, buying the supplies you need, getting the services done that you need, but it's not going to affect your social credit system. Now, with that being said, yes, at a certain point when they start looking for that, because initially they're not going to. Initially, it's just simply the people that are in the system are in the system. It's only when they start to look and see that there's still not enough people in the system that's when they start tracking down and looking for the cash transactions and the fraudulent transactions and things like that. That's when they start circling in and getting closer and closer. Now, along with that, there'll be the restrictions on the, mass transit, where, as a perfect example, right now, the new mayor of New York City, one of the promises made was, free buses, so free mass transit, at least for the buses, but the buses are controlled by the state. So the city of New York has no say in that whatsoever. That's a state office, their state Department of Transportation. So he can't offer that. Once a system is in place that does have a more uniformed level of control, where you do walk in and hop on and hop off because every person is monitored. Your biometrics are in the system, so it knows who you are, which on one aspect, I guess it would also be good that hopefully that reduce the number of crimes that occur on subways, on buses. So you have fewer stabbings, you have fewer people being lit on fire, things of that sort, because everyone's going to be identified and it'll be easier to track people. And then, of course, hopefully get after the people that are actually committing the crimes. The other inconvenience of that, though, is if for whatever reason within the social credit system, if this all occurs, any small transaction or slight transaction that you do that is questionable, or even in an associative, and that's the key thing, it may not always be, in fact, it most likely won't be you specifically. It'll be someone that you're associated with. And it's much easier to control someone if there are other people around them that you can squeeze and influence, versus just simply trying to be punitive against the one person. That's far more greater effect because every person is individually different. But if you've got people around you that are being affected by whatever your action is, and you may not think that it's a big deal, but when you see the other people being directly affected by it, and they know that they're suffering because of you, you can have two choices. You can just simply be, well, hey, it is what it is. I'm going to keep living my life, doing what I'm going to do, and they will continue to suffer. But then you will also find that you will no longer have that circle of people around you that you had before, relying to kind of help you out because you're being a dick about it, or you'll basically concede, bend the knee, and hop on board to get in to stop the other people that are around you from suffering from those effects. Now, it's not to say that the government would ever do any type of coercion on anyone to get them to do or get other people to do what they want. That's not at all what I'm saying. So don't come knocking on my door without a warrant. But it happens. And it happens because there's a level of power that once an agency, an operation has, and they know that there's no way to realistically stop them, because laws of physics, it takes an equal or greater force to stop anything of mass with momentum. Basically, whatever they're putting out, the only way you can stop it is by having an equal amount of force to match theirs or a greater amount over theirs to end it and stop it where it's at. Now, with that being said, pretty much we've covered what I like to consider the basics of what the CBDC could be. Yes, there are benefits to it. I'm not going to completely deny that there aren't benefits to the ease and convenience of a digital currency system. But with that ease and convenience, just like a lot of things that don't make any sense, there are far more smaller problems that come with that. Small little things that 1, 2, 3, 4 start adding up and becoming more of an issue later on down the line. And unfortunately, the farther down the road you go with the CBDC, the harder it is to pull back and to get out. And it becomes to a point more of a hassle where you lose time, you lose energy trying to do that. So it's almost a case of building up a network now, building up supplies now, coming up with certain off-grid plans now, and then watching to see where the system goes, how it evolves, how it may devolve. Because again, small little hiccups, that's the beautiful thing about new technology. Sometimes the smallest little thing can completely derail it. Sometimes just for a little while, months to years, sometimes for quite a long while. I mean, you think about it, I can remember, it was definitely late 70s. It was a car expo. It was in Toronto. And there were, the cars of the future. A lot of them was just the aerodynamic body stylings, and they were a lot of draft designs, and there were a few other things. There was an all-electric Volkswagen, but this was the boxy body Volkswagen from the 50s, the end of the 40s, early 50s, and it was all electric. And by all electric, I mean you have the driver's seat, the steering wheel, and then the rest of the space inside the vehicle were 18-volt batteries, 18-volt truck batteries filling the entire thing. But it was all electric. And I thought as a kid back then that this is the future. This is where we're going to be at. Now, that obviously did not come to pass, that particular vehicle, that particular style. In fact, the general use of any all-electric passenger vehicle, nothing through the 80s, nothing through the 90s. It wasn't until we got into the 2000s that we started to see, with like the Prius and then a few of the other manufacturers. And now we're in this sort of explosion point where just about every automobile manufacturer, I think, has at least one electric, either all electric or hybrid electric model for at least one of their lines all the way through. And that's the same way it's going to be with this digital wallet system. It's like, we've got the technology, we have the capability, but it's making those final last connections that's where the problems are going to be. And if it seems like there are going to be too many little hiccups, too many things that go wrong before they go right, that's going to delay the entire rollout, or they may have to roll things back and try a new plan. Now, what that delay could be and how long it could last, I have no idea, but it would be something to pay attention to in the immediate future, because that's really where we're at this point. It's not something that's going to be 20 years down the road. This level of technology that we have now, it could be done. It comes down to the performative art of the legislative process. You know, your representatives have to go out there and they have to make their case for it. They have to make their case against it. They have to give you speeches that they're going to make sure that you get the money that you deserve. And they have to make speeches of, we're going to make sure that those big corporations, you know, pay what they owe you. And they have to make speeches of, oh, the government's going to make sure that everyone stays safe. And they have to make some more speeches and promises about this system will be fair and equitable for everybody. Once they're done with all their speeches, they've already had the plan rolled out. All those speeches are just simply there to distract you. The plan gets rolled out. They've done their little test beds in different areas, different states, because that's the way that it usually goes. It's never going to be a blanket institution by the government itself. It's going to be the government throws the idea out there, looks at the public response, and then the cooperative states, no matter who is in charge, they make their own little adjustments and they start running their own little programs. And then when you look and you see that there have been 12, 18, 23, 40 states that have progressively over the last year and a half to 3 years done incrementally all these different things individually, you get a combined algorithm going. Then the government can say, okay, we're going to take the best of all these different states, make this the new program, roll this out, and boom, there it goes. Because a lot of times you think, well, how did the government come up with this so fast? By themselves, they did not. But with the private companies and the cooperation of certain states, that's how they get it done. They increment certain things. Some it might be the tax adjustment. Others it might be the, you know, new laws that implement legislation for the private businesses to collect more data. Other cases it may be fines and penalties placed upon people or transactions over a certain amount. Whatever it is, individually they start doing all that, and it makes the entire system, and then that system becomes the template that gets put into practice and then turns into a full functioning operating system. And after that, effectively, those old days of, you know, go to the ballot box and tell them how you feel really won't matter, because the entire system now will be operated and controlled by the algorithm. And it's not to say, and this is not an anti-AI thing, the math is there, the machines are there, there's no getting around that at all. That's done. It's a matter of what the people do with the data, how it's used, because the data could tell them this X plus this Y equals this Z. Plain and simple, the math is the math. But the people may look at that Z and go, yeah, no, I don't like the way that Z looks. I'm going to change that up. I'm going to make it out a W and screw everything up. So that's still where the primary issue. It's less about the AI and doing what it's programmed to do. It's more about the people and how they implement it. And that's where the problems I feel are really going to come down to it. Having an all-inclusive surveillance control system, I feel, is not good. But it's even worse when you have people that don't either have an understanding of how it can be misused, or worse, you have a group of people that do have an understanding of how it can be misused, and they know exactly how to misuse it, so this way they maintain control. That, I feel, is the far worse situation, I think, rather than most cases where ignorance is bliss. Yeah, the blissfully ignorant bureaucrat and politician, that's an issue, that's a problem, but that's almost to one extent, you know, give them a set of car keys and a candy bar, put them in the corner, and they'll be fine. It's the ones that do know exactly how to manipulate the system, how to get what they want out of it, how to maximize their return off of it, whether that return simply is, you know, 3, 4, 5 consecutive re-election wins, or whether that return is they get all the right people that they want into the different businesses that they get kickbacks from to maintain their influence and their power. Whatever their little thrill ride is, that's where I worry about the system going. But that's it for now, and I'll catch you in the next one.